morning. I was just listening to the previous gentleman, and thanks for taking my call. And he asked the same question about last year. I had bought a lot of Fidelity ETFs to start up a taxable account. I have Roth 401k, a rollover. I have my HSA and everything like that. So I started a taxable account with Fidelity, and I put a lot of ETFs, thinking that they were more more tax efficient.
Yes.
And they were in energies and materials and utilities, but they seem to be doing really bad. I bought them last year, and a whole bunch of them, and I don't think the returns are that great anymore. They're all in the red for a lot of months now, and I bought them in March, around March, April. Can I start selling those back, or would I incur, as I say, the short-term capital gains tax?
Hey, Steve, I'm sorry to hear that it's been so painful for you. You probably couldn't have picked a worse time to get into energy. I had a caller last week from the Villages. We had this same conversation in terms of investing in energy for a good dividend, a 5% dividend that only lost 35% of the principal. So the short answer to your question is yes, you can sell at any time and realize the loss for income tax purposes. So if you sell that on Monday, you've got a capital loss, it sounds like, and that goes in the bank to be used against capital gains in the future. Or you can write off $3,000 of that loss each year on your tax return.
So what you're doing, Jim, this is Steve. What many people do is you're focusing on a specific sector, believing that this sector will outperform given the current environment. And instead of picking an individual stock, whether it's ExxonMobil or in your case, a energy ETF, you believe that energy was underpriced and it would do well, only to be whipsawed and be disappointed by things that happen. So this is the risk of, besides picking individual stocks, of focusing on a specific sector, whether it's pharmaceuticals, whether it's chemicals, whether it's energy, whether it's banking, whatever it is.
Yes.
That's the risk that you have.
Right.
And that's what we avoid as financial planners, try to shy away from that. What we want is diversification. We're not trying to hit home runs. We're not trying to say that, well, this is depressed right now, so we're going to load up on this and hit a home run. The real key long-term success is diversification with quality, and that's what we do day in and day out at Certified Financial Group. So if you'd like more information about what we do and how we do it, we encourage you to go to our website. That's financialgroup.com, financialgroup.com.